big thank you to all of you for giving us an opportunity to present before you another young AMC, as sir introduced. Okay. Having said that, we all know India is at an inflection point. You know, the kind of structural reforms which we are going through, the demographics, the supportive conditions in the economy, other than the T square, which I am keeping it aside. T square? Trump tariff? T squares? Right? Trump tariff? I am keeping it aside for a while. Some problem. Having said that, slideshow. Yeah, slideshow. This one is the next one, okay? Which one is the next one? Some one. That we are here with our investment philosophy and investment proposition. So, can we see something here? A squirrel? What does the squirrel tell us? Any guess? Anything? Let's be a bit interactive, नहीं तो बोर हो जाएंगे. Speed, okay. What else? Going up and down, agility. Okay, you know, seasons speak a lot. है ना? Seasons speak a lot, and a squirrel adapts itself to the changing seasons, right? It knows survival is not by luck. It's because of discipline. Squirrel is persistent. During bad days, it remains stable. It does not react. And during good times, it does a planning. And we at Abakkus draw inspiration from squirrel. We are disciplined, we are agile, we are flexible. Because we know wealth is not created by haste. It's created by discipline. And all of us here are in the genuine business of creating wealth for our investors, right? And this is the philosophy of Mr. Sunil Singhania, who is the founder of Abakkus. Having said that, I'd like you to take you through the journey of Abakkus. And then, we have recently received a license for our mutual funds. So we have launched our maiden NFO into a flexi-cap category. So the main question, obviously the question which would come to your minds is, what's different? We have a number of flexi caps, right? How is Abakkus going to be different when we talk about this particular fund? So let's try to understand our investment philosophy, our investment framework, our journey, and our product positioning, so that we can be a value add to our investors and to our clients. So Abakkus journey began in 2018, and we all are aware Abakkus is into the space of alternates and PMS. We have 6 alternate investment schemes going on, out of which, of course, 5 are closed-ended, 1 is a recently launched open-ended one, and we have 3 PMSs with different, investment disciplines and strategies. So from 2018, we are here in 2025. With our license for mutual funds. Was founded by Mr. Sunil Singhania. As I understand, sir gave a short synopsis of Mr. Sunil sir. We fondly call him Sunil sir. Plus, we all know Sunil sir very well. During his good old days, he was with Reliance. Reliance Growth Fund has grown over 100 times, during his tenure. He was the first Indian to be appointed on CFA Institute. And definitely he is himself a CFA and a CA by profession. So now introducing Abakkus Mutual Funds for you. Okay, our investment philosophy. We are alpha generators. We believe in investing with an endeavor to generate alpha. Simple hai. Sunil sir himself is very much focused on this. He says when an investor gives us money, it's our responsibility to generate wealth for our clients. So when we speak about that, we look at the companies which are profitable. We do not go into companies which are loss-making kind of a stuff. No loss-making ideas go down the brain of Mr. Sunil Singhania. When we talk about the fundamental driven approach, yes, we follow a bottom-up research approach wherein we will first analyze the company, the balance sheets, the financials, then the sector, then the industry, and so on and so forth. Then we'll go to the economy and then the other things. We look at the risk-reward ratio. The price which we pay is very important. Is the price what we are paying commensurate with the risk and the reward ratio? Is it in line with it? If yes, fair enough. If no, it will not be into our investment ideas. Then we are agile and flexible. As I said, we draw inspiration from squirrel. A squirrel adapts itself to the changing market situations. We also are agile and flexible. We are not constrained with any particular theme or a style when it comes to investment. We would like to make changes to our portfolios as and when required. We are patient investors. We buy and hold. We would not like to, react to the particular situations. We would like to respond as and when required. And at times we are happy to be contrarian. We would not chase momentums. We would like to be the first investors if a company might be a good investment idea. If others are not looking for it, that's fair enough. But if we feel that a particular company fits into our XYZ criteria, our MEETS framework, which I'm coming next, if it fits into that particular framework, definitely we would like to take that company on board into our investment portfolio. So this is our MEETS framework, a beautiful framework, and we do not deviate from this particular framework. Trust me, those sitting in the room, we do not deviate from this particular framework. So this MEETS framework constitutes management's, earnings, events/trends, timing, and certain structural changes. Let us briefly touch upon these particular points because it's important to understand what will go in our portfolios when it comes to investment ideas. So management, definitely the quality of management is very important. If the management, I do not want to name any companies. Having said that, if the management is not interested in running the business, that should not be included in one of the portfolios. Capital allocation. CapEx is important. But then, is the CapEx actually, yielding to increase in return on equity? One needs to study that. If I'm doing a capital expenditure, and having said that, if it is not leading to increase in the return on equity, is it a good expenditure or a bad expenditure? Aren't we going somewhere wrong if my CapEx is not leading to increase in return on equity? That is what we try to analyze here. Definitely business errors does happen, but then avoidable mishaps should be avoided. Then we talk about the earnings. The quality of the earnings versus the reported earnings. This is all about fundamentals. This is all about fundamentals because we at Abakkus only and only believe in fundamentals. So when we talk about the quality of the earnings, is a particular company doing certain aggressive accounting? We need to check that. If they are doing certain aggressive accounting, then we need to go deeper, dig deeper into the numbers. Why, where, how, when, everything will come into picture. Then actual earnings versus the expected earnings. Are the actual earnings in line with the expected earnings? We shall check that. Cyclical versus structural earnings. If the earnings are cyclical, definitely they would be very volatile. If the earnings are structural, if they are coming from the cash flows, definitely it would be sustainable over a longer time horizon, which can be a good investment. Because when we talk about equity, in fact, I understand when we all talk about equity investment is like 3 to 5 years kind of a time horizon. We cannot talk short term about equity. Definitely, theek hai. At times, it might happen that your luck is there and investment might double maybe in 6 months or 1 year, but then gone are those days. Gone are those days when your investment would have been doubled in, say, 6 months or 1 year. We need to be fundamentally strong, and definitely, EV upon EBITDA is a very important ratio which we look for, because we want some investments, we try to find or figure out certain investments which might double in, say, 4 to 5 years. If I say investment doubling in, say, 4 to 5 years, this means a return of around 18%, right? So we would try to figure out the businesses which might double out in, say, 4 years. And having said that, this ratio is very important, because if this ratio decreases, this means the enterprise value, your numerator has to decrease or your denominator has to increase. Either way, right? If the enterprise value is decreasing, this means your debt is decreasing. And if your denominator is increasing, this means your earnings are increasing, right? So we try to figure out those businesses where this particular ratio can be held in 4 years. Then we talk about the events and trends. Definitely, what is the, does any event impacting a particular stock? Because events can be a buying or a selling opportunity, A certain good structural change is happening, a certain good structural event is happening. It can be a buying opportunity for certain businesses. And it can be the other way around also. Maybe a XYZ investment idea is there in our portfolio, and certain event is occurring which would lead to a longer impact that the company, the investment or the business might go down. So, events and trends are very important to be monitored. Then the timing. Timing, here I mean not timing the market. If I would have timed the market, I would have not been working with Abakkus. I would have sitting at home, minting money by myself. मैं नौकरी नहीं करता, right? Timing here means, is the price factoring all the future events? If yes, if the current price is factoring all the future events currently, I don't think that investment idea will run off. Because the price is factored all the information right now. So I don't think I'll be able to generate returns on that particular investment idea. So we would definitely look at the timings also. Mean reversion is very important. If a particular investment idea, if a particular investment is trading at a very high levels, it will definitely mean revert to the lower levels, and the vice versa also. If a particular investment or if a particular business or a particular stock is trading at lower levels, then it means definitely it will come up. So mean reversion is also very important. Also saying that the structural is very important when we talk about the competitive positioning of the business, the moats, of a particular business. So this is the MEETS framework. So our investment philosophy and our MEETS framework leads us, to a particular 5D process. This is the 5D process which, comes into picture post our investment philosophy and post our MEETS framework. What is this 5D? It's simple: discover, dwell, develop, detail, deliver. पढ़ने के लिए तो I very easily read it. But then having said that, it means from the universe of 6,000 stocks, we slowly and steadily filter out certain stocks. Then we see and check if it fits into our MEETS framework. If it is fitting into our MEETS framework, we move ahead to analyze the particular business to particular stock idea. And then the same is being presented to a fund manager who, if convinced, again I am saying, who, if convinced, this particular idea goes to the investment committee, which is of course headed by Sunil sir. And if everything falls in place, then the particular investment would be in the particular portfolio. So this is our investment philosophy, our meets framework, and then our 5D process. Of course, we have a risk mitigation framework also, wherein we handle the company risk, market risk. Liquidity risk would arise when we talk about the mid caps and small caps, because it is difficult to liquidate mid caps and small caps. And that's why our portfolios are a balance of leaders also, along with the mid caps and small caps kind of a stuff. And we all know Sunil sir, his specialty is into mid caps and small caps. Identifying the gems is the core skill set of Sunil sir. So these are the board of directors which we have. Sanjay Doshi would be the fund manager. Sanjay Doshi would be the fund manager for FlexiCap fund. Sanjay Doshi has worked along with Sunil sir during these Reliance days. He himself is a CA and a CFA charter holder. Now the main question. ये सब ज्ञानबाजी तो ठीक है. Now the main question. Why Abakkus FlexiCap? So we did certain back testing and we found out, there is around 5.3 lakh crores of the whole AUM, from the whole AUM there's around 5.3 lakh crores into FlexiCaps. So we did some back testing, we did some analysis, and we found that 91% of the industry AUM has more than 60% of the portfolio into the large caps. This means that when we are talking about the FlexiCap funds, they are more of quasi large caps, and not the real FlexiCap which toggle between the large, mid and small. Similarly, we tested for others also, the small caps and mid caps also. And also we saw that the average number of stocks is at a higher side, that is 69. When we checked the portfolios of FlexiCap and all. Here, we would like to make a difference when we talk about Abakkus FlexiCap fund. As we all know, and as I repeatedly said here, that, the fund houses, founder members, core skill set lies in identifying mid caps and small caps. So, our FlexiCap portfolio might be having a bit of more tilt towards mid caps and small caps. Having said that, it doesn't mean that I will not have large caps in our portfolios. I will have to have large cap in our portfolios just to balance out the stability part. And to generate that extra alpha, we will have a tilt towards mid caps and small caps. Also, when we analyze, the funds with higher AUMs have a higher tail. Here, we would like to create a conviction portfolio with around 45 to 50 stocks. So, our portfolio will be positioned in such a way that, it would have a tilt towards mid caps and small caps. I'm using the word tilt. I'm not saying biased. It would have a tilt towards mid caps and small caps. And definitely we would try to avoid a long tail by having around 45 to 50 stocks maybe in the portfolio. So NFO, we have a FlexiCap fund. The NFO is open from 8th of December to 22nd of December. And having said that, I don't want to take you through why a FlexiCap fund is a value add when it comes to a client portfolio, because we all are experts into it. We all know why a FlexiCap fund is needed, in a particular portfolio. Because the FlexiCap fund will be able to adjust itself to the changing market situations. A FlexiCap fund is a value add when it comes to a client's portfolio. So these are the nitty-gritties, the product features. And this is where our fund focus would be. It would be a balance of leaders as well as potential winners. So a tilt of large caps and mid caps. Having said that, we will have high conviction ideas And also, as I mentioned, we would like to have the investment horizon with a 3-year plus for our clients, because we will have a tilt towards mid caps and small caps, and they need time to generate returns when it comes to portfolios. These are certain analysis which we have done. No sector has performed well consistently, neither no market capitalization, I mean to say here large cap, mid cap, small caps have consistently performed well. So we decided to come out with a flexi cap fund, wherein we would like our investors to take the benefit of our investment philosophy and the framework. I do not wish to run through, the equity outlook, because we all are well versed with it, and I understand we have been reading, plus we had a power pack session with regards to, the KBC round at the start by Sir. So in case of empanelment, we would like you to reach out to our representative, Mr. Krishna. Krishna is here.
Hi, good evening. Vanakkam. So we just started our journey with the I think I can say youngest in the industry now, 50th AMC. And my role is here to build a fruitful MFT franchisee with Abakkus. I manage IFA vertical for a South region. And we just started our first product. I think we are already live with around 12 cities. And we will be having around next couple of months, we'll have 12 cities. We will add a few more, people in our company. And you will see a lot of, baskets in the next coming months. I think the next will be the most probably the small cap, which Musun is our favorite. And next, I think we'll have some of the multi-asset and the theme products. So that is what we want to expect from Abakkus side. And empanelment, anything we can do it through online for individual as well as a non-individual. And you can reach me out for any time. We also have an office in Chennai. Raj Pinnacle is a place. So my colleague is there, Vaibhav, but unfortunately with his personal reasons he couldn't come here. So thank you so much, and looking forward your support for this, journey. Thank you so much. Thanks.
Thanks a lot, Mr. Anup and Krishna Berry. In South India, what happens is, dairy products are the one which we keep buying every day. So I'm sure there will be enough of information